Forget China, Latin America is the place to be if you want strong returns in 2011 and beyond. Economists feel that while Asia is still a major engine of global growth in these recessionary times, China's interest rates have spiked twice in the past 3 months to calm inflation, and that's a move that risks tapping the brakes on its own impressive growth. Therefore, the argument goes, things are swinging the way of Latin America, where tame inflation and growing economic demand make Brazil, Peru, Argentina and Venezuela countries to watch. Number crunchers at the Bank of America Merrill Lynch put it this way: accelerating capital inflows, stronger domestic demand and minor risk of inflation mean Latin America could move to the fore in 2011.
Stable budgets, they lower inflation, they open up their economies to world trade. Those reforms have provided the basis for these boom years that we are experiencing right now. Of course, high demand for raw materials from China and India has also played a part, especially in countries such as Brazil and Argentina.
With Brazil swearing in its new president, Dilma Rousseff, this weekend, economists are looking for her to step out of the shadow of her predecessor and maintain his pro-growth, state interventionist economic model. Presidential elections in Peru are looming in April. Many candidates support the open, competitive economic model and ending corrupt and inefficient state practices. One worry, though, with annual economic growth of around 8%, there may be a reluctance to rock the boat too much while things are soaring. Argentina will be holding presidential elections in October. In the meantime, high demand from Asia and technological developments mean the country's economy has proved resilient in the face of expropriations, high taxation and political interference. In Venezuela, despite 2 currency devaluations in a year, it's all eyes on Hugo Chávez's attempts to clip the wings of the new National Assembly with its sizable opposition bloc, which will be seated in January. Annualized economic growth in Latin American countries has been averaging between 4 and 5%, above that of the United States and Europe. Debt is under control, the banks are well funded, and trading between neighbouring nations is currently flourishing. It's true that more work needs to be done to conquer poverty, but the consensus among economists seems to be that going into 2011, Latin American countries are set fair to fight back after the global recession of 2008. John Terrett, Al Jazeera, at the World Bank in Washington, D.C.